Hello, everyone. This is Justin Smythe from nextbigtrade.com. This is your weekly index review for January 5th, 2024. Happy New Year to all my subscribers, and I'm excited to get a new year started with the newsletter. However, as we have seen with the S&P 500 to start the year, this was a very negative start and not something that we didn't expect after the end of the year last year and what we discussed with a lack of new stage two breakouts, some leading sectors starting to falter. In particular, artificial intelligence started to act weak towards the end of the recent rally. And then the cryptocurrency miners started acting weak at the end of the year last year as well, and being the leading sector, that was a big warning sign for the market as well. So I was actually pretty confused by just the amount of bullish commentary that was out there at the end of the year last year. I thought it was quite amazing in contrast to what I was seeing with what was going on in the charts. And, it turns out that the charts were probably telling the real truth, and there was a lot of things under the surface that just weren't acting right, which has led to some weakness to start the year. So starting out with the S&P 500 on the weekly chart here, you can see that volume was below average, but it was a holiday shortened week. So actually, as we'll see on some of these charts, volume was actually above average to the downside on, in particular, the small caps, which shows just how weak and how strong the selling was during this holiday shortened week to start the year. And looking at the daily chart, as we discussed in a couple of recent newsletters, we were looking at perhaps the consolidation zone in early December as being a logical place the market might pull back to. This would also coincide around the 50-day exponential moving average, which is the same as the 10-week moving average. You can see that on the daily chart, the volume was above average on the down days. And then on Friday, there was a little bit of a bounce in the market. The US dollar actually pulled back as well. But overall, sellers still look like they have control heading into next week, with a lot of bearish action occurring in this market. The NASDAQ 100 was down over 3% for the week, underperforming the S&P 500. The start to the year is very similar to early 2022, where technology was the big winner heading into the end of 2021. Then the 2022 bear market starts and big cap tech just gets hammered all year. Then we had a huge stage two uptrend in technology led by big cap tech in 2023. And now it seems to be reversing again to where technology, at least to start the year, is under pressure. So you can see how the NASDAQ 100 was down big, and then the NASDAQ composite was down on this would have been a heavier volume week as well if we had a full trading week. So that's pretty heavy volume for a 4-day week. So again, big time selling this week. And you can see how the Dow here, the Dow is the index that has the least amount of technology stocks, and it fared the best. It was only down less than 1%. So again, healthcare actually did fairly well this week, but technology was under significant pressure. The small caps were really where massive selling occurred. You can see how there's above average volume here again on a holiday shortened week. This would have been one of the biggest sell days of the past 2 years. You can see it would have been, close to similar volume as the March week here is what we would have had if it would have been a full trading week. The small cap Russell 2000 growth was down over 4%, and the transports were down over 2% on heavy volume. So bearish week, potential for maybe a bounce to start the week next week. But again, there's one of the things I discussed in the newsletter, there's a complete lack of stage two breakouts right now. There's no leading sectors emerging outside of a potential sector move in cannabis that could take place if the right conditions occur. But other than that, the market looks really vulnerable to more downside, given the fact that nothing is really setting up right now. Turning to the VIX failed to retake the 10-week moving average, so that's the line in the sand. When the VIX trends above this moving average, that tends to be the corrective period, which is what we saw last year in September, and then back in March, and then back during the 2022 bear market. So we're looking for the VIX to continue to move higher here as the market remains in correction. And there's potential for more volatility to return to this market, especially next week as we start the first full trading week in the last 3 weeks, next week. Now, looking at some of that big volume in inverse ETFs, SOXX, this is one of the biggest inverse ETFs in the entire stock market. Took its biggest weekly upside volume ever this week for a holiday shortened week. Semiconductors were a leading sector, so this is pretty interesting to see massive volume coming into a bear semiconductor ETF. And the small cap ETF TZA, this one was the one that was noted in the newsletter at the end of 2023, saw some big volume and then more follow-up volume this week. Follow through to the upside. You've got basically a failed breakdown set up now, and which is, on the opposite, it's a failed breakout in the small caps themselves. So, more volume here would signal basically a sudden reversal and then the small caps underperforming, which is what happens in corrective periods. Finally, in terms of breadth, we look for more oversold breadth readings to be a better place to buy stocks. Breadth is still extremely overbought even after this week's action. Stocks were just simply way above moving averages at the end of the year last year, which is why they barely moved down. Breadth barely moved down this week. This should start moving down more quickly if more corrective activity occurs. But overall, definitely want to see this move back towards the red line at least, or even lower to be a better buy point during this correction. So overall, this market still remains extremely vulnerable. There's not much positive at all really that happened this week. And it's a good time to be patient, be extremely defensive, and to wait for better opportunities.